Hey everyone, welcome back to Corporate Decoder, the place where we'll take a deep dive into financial documents and see if companies are playing a winning hand or if they're bluffing their way through it all. Today we're looking at BRB Foods Inc. and their latest SEC filing, a document that might just tell us if this company is baking a recipe for success or if they're burning the whole kitchen down. So BRB Foods Inc. has filed a post-effective amendment to their registration statement, and it is a bit of a mixed bag. They're looking to sell a whole lot of shares, but things haven't exactly been booming for them lately. They're planning to offer 3.75 million shares of their common stock, aiming for a price between $4 and $5 per S-share. Sounds pretty standard for an initial public offering, but let's peel back the layers. Okay, here is where things get interesting. For the 9 months ended the 30th of September 2025, they reported zero net revenue. That is right, absolutely nothing. And for the year ended the 31st of December 2024, their revenue was a mere $40,000. Compare that to over $10 million in revenue in 2023, and you can see a massive drop. This isn't just a small dip, it is a near total halt in sales. And of course, with no revenue comes significant losses. For those same 9 months in 2025, they reported a net loss of over $800,000. That followed a net loss of about $1.6 million in 2024 and a staggering $5.8 million loss in 2023. It seems the company has been struggling to generate income for quite some time. The risk factors section paints a pretty clear picture. They've incurred substantial operating losses, produced negative cash flow from operations, and their own auditor has raised doubts about their ability to continue as a going concern. This means there is a real possibility they might not be able to keep their doors open if they can't find a way to get more money or boost their sales. The reason for this dramatic drop in sales might be found here. They made a strategic decision to temporarily pause selling their products starting in the second quarter of 2024. Their excuse is they wanted to prepare for launching 41 new products nationwide across Brazil. While a big product launch can be exciting, this pause is a huge gamble. They're essentially betting that this new lineup will revitalize their business and cover the losses they've accumulated. This is the core issue. They've got a negative working capital of over $7.3 million as of the 30th of September 2025. That is a lot of money owed compared to what they have readily available. Lacking sufficient funds could crush their ability to continue operating. It is also important to note that BRB Foods Inc. is largely a holding company. Its primary assets are its ownership in its Brazilian subsidiaries. If those subsidiaries face restrictions on moving money out of Brazil, that could severely impact BRB Foods Inc. itself. And to top it all off, the markets they're in are incredibly competitive. They're up against big players with deep pockets. Standing out in this environment, especially after a sales pause, will be a tough climb. Adding to the complexity, one of their crucial license agreements covering 20 of the new products they plan to launch actually expired at the end of 2025. They're in talks to renew it, but there is no guarantee it will happen, or on terms that are good for them. Missing out on these products could seriously derail their entire relaunch strategy and their revenue expectations. Looking at the offering details again, we see they are offering 3.75 million shares of common stock. They've also granted the underwriters an option to buy an additional 562,500 shares. This is to cover any extra demand. And if that option is fully used, they're looking at raising quite a sum. The plan for the money raised is to use 80% for general corporate purposes, including working capital and operating expenses, a further 10% for product development and business growth, and the remaining 10% for potential strategic investments or joint ventures. This is a common allocation strategy, but given their current financial state, the effective use of these funds will be critical. It is also worth noting their reporting currency is the US dollar, but most of their business happens in Brazil, where they deal with Brazilian reais. This means currency exchange rate fluctuations can really impact their financial performance. Leadership-wise, Paulo R. Bonifacio is the Chief Executive Officer, President, and Director. He stepped into the CEO role in February 2025 after Bruno Bonifacio resigned. Interestingly, Bruno Bonifacio is Paulo R. Bonifacio's son, which means the company has significant family ties at the top. On the legal front, they're involved in a couple of proceedings initiated by former employees of a business partner. They claim they've been wrongfully associated with these cases and expect not to be liable, but there is no guarantee. They also mentioned they do not currently maintain product liability insurance, which is a significant blind spot. Look total assets 208,86711. Look. Now let's glance at the balance sheet. As of the 30th of September 2025, their total assets were just over $2 million. That is down from over $2.1 million at the end of 2024. On the flip side, their total liabilities shot up to over $8.8 million from about $7 million. This widening gap between assets and liabilities is a serious red flag. Look accumulated losses 7874762 scroll. And that negative shareholders' equity isn't a good sign either. They have accumulated losses of nearly $8 million. It is clear this company has a long road ahead if they want to turn things around. Looking at foreign currency translation, loss gains of scroll. Looking at other comprehensive income, we see a significant negative foreign currency translation adjustment of over $1 million for the 9 months ending the 30th of September 2025. This mainly stems from their Brazilian operations and highlights the impact of currency fluctuations on their overall financial picture. So what is the story here? BRB Foods Inc. is in a tough spot. They've paused sales, significantly impacting revenue and racking up substantial losses. The claims of substantial doubt about their ability to continue as a going concern due to negative working capital and accumulated losses are hard to ignore. Their dependence on licensed brands and a key license agreement expiring add another layer of risk. The planned product launch and the capital infusion from this offering are their big plays to recover, but it is a high stakes gamble. They're betting on a national relaunch after a sales hiatus, hoping to capture market share and achieve profitability. However, the competitive landscape, the ongoing legal matters, and the very real possibility of not making it as a going concern make this a very high risk investment. This is a company that is fighting for survival, and this IPO is a crucial lifeline. Will they manage to execute their ambitious relaunch plan and become the national food giant they aspire to be, or will these financial and operational challenges prove too great? Only time and these upcoming sales figures will tell. Alright, that is our look into why BRB Foods Inc. Its latest filing is full of more questions than answers. What is your take on their strategy and their chances of survival? Let us know in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more deep dives into the world of corporate finance. And don't forget, community is key, so join our Discord server linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.